Welcome to Short View Trading. My name is Chris Watling. I'm the CEO and founder of Daily Rag Trader. And this is your morning market hit for Monday, 13th of May. It's around 9 a.m. London time. So if you want to trade equity index futures on a 1 to 2 week basis, either long or short, what should you go about doing? What should you think about? What factors do you need to take into account when you go about deciding when to enter and whether to go long or short those equity index futures? That's what we're going to dig into in this video. And of course, one of the first things you need to think about when thinking about how you want to implement equity index trades is the context of the market. How's it been performing? What's it been getting up to? Because last week was one of very good weeks for equity markets across the globe. The S&P 500 was up around 1.8%. One of its better weeks over the course of this year. As you can see, this chart we're putting up in front of you of weekly returns of the index over recent months. The Dow Jones was even better, up 2.2%, its best week in 2024, whilst European markets performed better with a strong 3% return over the course of the week, as you can see on this chart of European weekly returns that we're putting up in front of you now. So it was a pretty good week, and in fact equities have been propelled higher since that local low we had in mid-April on April the 19th, when the equity index hit a low after selling off from the 1st of April. Since that time, over recent weeks, the equity market's been propelled higher by a variety of factors. And those factors have included shrinking volatility, a falling VIX, which of course drives equity markets higher. The VIX and the S&P 500 tend to be inversely correlated. So that's contributed. Shrinking, narrowing high-yield corporate bond spreads has also been driving equity markets higher. Of course, a narrowing high-yield corporate bond spread is a narrowing risk premium on the corporate sector, hence equities go up. Added to that, you can look at a weaker dollar. The dollar's been weakening over recent weeks. That's underpinned an uptrend in equity markets. And of course, financial conditions, which aggregate all of the above and one or two other factors, have been loosening over recent weeks and driving equity markets higher, as you can see in this chart that we're putting up in front of you now. So the market's been propelled higher by a variety of factors, but there's a limit to how far those factors can go. There's a limit to how much they can propel the market higher. So for example, the dollar is now oversold. As you can see on this chart we're putting up in front of you now. As of mid-April, it was pretty overbought. Since then, it's given back some of those gains, the dollar trade weighted index, and it's now almost at the oversold levels. So that factor is largely exhausted. The VIX is at record lows. The VVIX, which is the volatility of the VIX itself, is pretty much at 10-year record lows. So there's a limit to how much further they can fall and thereby propel the market higher. And then, of course, on top of that, complacency is building. Traders have taken off downside put protection. Put protection is useful, and traders use it when they want to guarantee the gains they've had in the stock market. They take it off when they become complacent. As you can see from the put to call ratio chart that we're putting up in front of you now, this has been taken off in recent trading sessions. This model's pretty much back on sell for equity markets. And indeed, if you aggregate all that, and as I mentioned, look at financial conditions, you can see they're pretty much at the loosest they've been in a decade. So there's not much looser that they're likely to get. They're at their limits. And this, of course, all makes the market vulnerable on a 1 to 2 week basis. And it's in that context that it's pretty interesting, the data we've got coming out over the course of this week, because this week on Wednesday we have US CPI data, the inflation data out of the States, consumer price inflation, which has been sticky over the course of this year and concerning for market participants and concerning for Fed governors as well. It's one of the key reasons that all the rate cuts have been pushed back and priced out of the curve over the course of the last 4 or 5 months as we've gone through 2024. So CPI is a big data point, and we're coming into it complacently priced in markets, priced for perfection. So whilst we have no idea whether CPI is going to surprise to the upside or downside, that's a mug's game trying to forecast that. What we do know is that the market's much more vulnerable to a downside surprise. The risk return favours the downside rather than the upside. The upside's heavily priced in, volatility's low, spreads are tight, financial conditions are loose, all those factors we discussed. But equally on the downside, nothing is priced in. We're priced for perfection. So the market is vulnerable to the downside and vulnerable to any sniff of negative news flow. So it's in that context that we think about how we implement our 1 to 2 week equity index trades. And if you want to follow this in detail each and every day, please take a free trial to the RAG Trader, the Daily RAG Trader. Simply click on the link below and we'll send you the Daily RAG Trader for a short period of time. And you can assess whether or not it helps you and enhances your trading style and your approach to trading equity index futures. Equally, if you're a subscriber, it should be in your inbox about 8:30, 9 a.m. London time, every business and trading day. So what are we watching today and this week? Well, as I mentioned, there's some interesting data out of the US, macro data. CPI, of course, is critical on Wednesday. But ahead of that, we got NFIB's small business survey on Tuesday. That'll be watched closely because that's been pretty weak. This idea there's a two-speed economy in the US and the small and medium-sized businesses are struggling much more. So there'll be some insights from that on Tuesday from the NFIB business survey. And then finally in the US macro data, we've got conference board leading economic indicators later this week. Elsewhere, it's continuation of US quarterly earnings. We're coming towards the end of the season, but there's some interesting retailers out this week, including Home Depot and Walmart. And then finally, some pretty important Chinese data, the monthly lending data out probably sometime later this week. We never know for certain when it's going to come out, but it's due this week. It's always important. It's a critical data point for China. So that's it from us. That's your morning market hit for Monday, 13th of May. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button, like and share on social media. We'd be grateful if you did that. Or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe. Trade well.